Good morning, everybody, and welcome back to the Stockbrokers Zambia LuSE 30th Anniversary podcast. The topic of our discussion today is the future of the capital market in Zambia, trends and predictions. To discuss this special topic, we have a panel of three members drawn from the Corporate Finance Division of Stockbrokers Zambia Limited. We have Mr. Boniface Mwamba, who is Corporate Finance Manager. We also have Mr. Chinzewe, who is a Senior Analyst at Stockbrokers Zambia. Last but not least, we have Ms. Victoria Kawonga, who is an Analyst at Stockbrokers Zambia. Mr. Mwamba, Mchema, and Victoria, welcome and thank you for joining us as a panel.
Thanks for having us.
Thanks for having us.
To get straight into the discussion, what emerging trends are you noticing in the capital market, either at home or abroad, which point to the future or direction of the capital market?
Thank you for that question, Lewis. I think I'll just start with the trends that we have seen locally. So in Zambia, we are seeing an increased participation by individuals in the capital markets, especially younger people. We're seeing more and more interest among younger people in investing, especially in stocks. We are also seeing a participation by individuals in bond issuances. And a good example is in the CEC Renewables green bond that has just been issued. We received several applications from individuals to participate as investors. So that's what we've seen recently, and that's the direction we're going in, is just having an investor base that is filled with a lot more younger people. Another trend that we've observed is the implementation of the capital markets master plan that should have been launched last year. And the goal of this capital markets master plan is to develop the capital markets and to have the capital markets play a bigger role in the country's economic development. And that closes out basically what we've seen in Zambia. And moving on to a more global setting, I think what we've observed, what you'll see in the news, is that there's significant capital flow actually to more emerging markets. We're seeing a lot of interest growing among investors to invest in countries, for example, like India. And another trend that I'm sure people are aware of is incorporating ESG factors into investment strategies. That's something that we're seeing a lot more investors doing. So they're looking to invest in projects that are more sustainable and push the whole green or environmentally friendly or socially impacting agenda. Those are the trends that we've seen. I'll allow my colleagues maybe to add to that.
I think globally there's also been four main undercurrents that are going on when it comes to investments in the capital market, specifically companies that have grown quite large on these trends. The first would obviously be tech. We had the tech wave, not bubble, with Facebook, Twitter, Microsoft, Apple, those being first wave. Now we've got an emerging trend in chips and AI. OpenAI isn't a listed company, but they've raised huge sums of money. But when it comes to chips, it's far more easy to see the trend that's going on with them. I think NVIDIA was recently crowned as the world's most valuable company, if I remember correctly. We also have AMD and a lot of other chip companies that are coming up and raising lots of money and are just moving a wave of capital flows in the capital markets, particularly in America. So that would be number one. Number two would be green projects and financing. We care more about the environment and the world now than we did a few years ago. So money is starting to flow to more green projects, as Victoria mentioned, when it comes to ESG financing. Thirdly would be renewable energy. One of the interesting trends is we see a lot of legacy oil companies starting to invest more and more in renewable energy projects. Total and Puma are starting to really build out their renewable energy portfolios, particularly in solar energy. And then finally, there's been a shift to the mining of critical minerals for the green energy transition. So copper, cobalt, lithium, these have become very, very important minerals which have led to a lot of capital flows moving into the mines while mining these critical minerals. There was recently a takeover bid for Anglo American from an Australian mining conglomerate. If I remember, it was BHP who was trying to come into Anglo American, but there's a lot of interest there. And then even if you're looking at motorization or moving from oil to energy, all you have to do is look at what's been going on with Tesla and the share price appreciation there. And Tesla is just purely an electric car company, and its market capitalization beats a lot of legacy car companies. So we've got these trends which are really moving. Capital flows are really going there, and the companies are really growing at an exponential rate.
Given those points that you have raised, What is the likely impact of these trends on the Zambian market in general and the LuSE in particular?
I'll just build on what I said in the initial question. I think we'll see the investor base sort of getting larger and driven by individual investors who shouldn't be underestimated. I mean, we've seen individual investors, the percentage of individual investors participating on the LuSE go from less than 1% in 2023 to over 10% in 2024. So there's a lot of activity in terms of contributing to the turnover on the LuSE. There's a lot of activity that can come from individual investors, and they can make a really big part of the investor base on the LuSE. And consequently, what we'll see as more and more people invest in stocks and bonds is that people's investment portfolios will consist of these kinds of instruments that are typically found in the capital markets. And that's moving away from the traditional or typical investments of like real estate and livestock that we see the Zambians sort of leaning towards. So we'll see more sophisticated instruments that are found on the stock exchange being a part of the portfolios of a lot of individuals in Zambia. And in that way, they'll be creating wealth using these instruments, and creating generational wealth as well by investing in some of these instruments, which is what was intended, when the stock exchange was created, is to empower the Zambian citizen and to provide a channel for creating wealth for the ordinary Zambian citizen. I'll just allow my colleagues to contribute there as well.
Thanks, Vicky. When it comes to the Zambian market in general, I think the two major trends are going to be in renewable energy and the mining of critical minerals. If we look at our exchange, there are three main companies that I would like to highlight. So if you're looking to get into mining of critical minerals in Zambia and you don't have the millions of dollars to go into it yourself privately, ZCCM is the only mining company that is listed, and it can grant you direct exposure into mining, particularly of critical minerals. We have had movements in their subsidiary investments in Kansanshi, Konkola Copper Mines, we've had Mopani, and we've had Mwamba. And one of the things I'd like to point out is when it comes to Mopani and Mwamba specifically, these were large investments by foreign entities that came in and partnered with ZCCM to get into them. So with Mopani, we've got investment coming from the UAE, and that should revitalize Mopani and lead to increased copper production, which has been one of the stated goals of our current government. And then with Mwamba, we have a company that is out of America, which has put in quite a bit of money. And one of the interesting things about Mwamba is greenfield, which means that they are doing the exploration now. A lot of the CCM's mining assets have been legacy mining projects, but Mwamba is greenfield, which means that it should, once it's set up and mining, lead to a significant increase in copper production. One of the other things is that cobalt, as I said, is from America, but it's backed by some pretty big heavyweights. You've got Bill Gates sitting there. I think you've got Jeff Bezos sitting in cobalt, and they're trying to leverage new technologies when it comes into mining. That is very exciting in the next 5 to 10 years when it comes to mining. And then if you're looking to get maybe an indirect exposure into mining, you've got AECI, which is an explosives company. As mining increases, you also need more explosives to dig down into the ground. So AECI, given their position and the fact that they're listed, can give you an exposure into the mining sector. And you can kind of look at one trend following another, the fact that they're correlated. And then finally, we have CEC. CEC, you benefit two ways because CEC is an energy company. You benefit from the renewable energy aspect. And then secondly, most of CEC's client base are mining companies. So you still benefit from the switch to critical minerals. So you have CEC, which has itself CEC used to be more of a middleman buying energy from certain producers, particularly ZESCO, and then supplying that to the mining companies and then controlling the infrastructure, or you can look at it as the roadways connecting the supplier to the consumer. Now they're getting into supplying of energy themselves through their incorporated entity called CEC Renewables. So that's a great play there when it comes to renewable energy. And then, as I said, with mining, as the switch to critical minerals continues, mines are going to need more energy and new mines are going to be set up. When it comes to the Copperbelt region of Zambia and the Katanga region of the Congo, really the main supplier of energy is CEC. So that puts them in a great position as we move forward to really increase their revenues, really improve as a business. And if you're looking 5-10 years down the line, it would be a great pickup.
Victoria spoke to the demand side, where we are seeing a lot of retail investors trying to come into market and demand alternative ways of investing their savings away from the traditional investments like real estate. And then on the supply side, I think my colleague Nchema has given a lot of information, and I just wanted to speak more, I think, on the supply side in terms of what we've seen and given the trends that we are seeing in the local market and globally as well, and particularly the impact that those trends have on the LuSE. So we're seeing a lot of more companies coming in, inquiring the possibility of them issuing sustainable bonds, particularly green bonds. And the case in point, I think, is like Mchema has already alluded to, Copper Belt Energy. Last year, they issued their first tranche green bond. This year as well, as we are speaking, I think they're in the process of issuing a second tranche under the medium-term note program green bond, which is something that is new to the market, and it has excited everyone, retail and institutional investors as well.
It seems like the green bond, could it have affected or could it be correlated to the increase of trading activity on the market throughout the year?
Zambia is unique when it comes to corporate bond issuances is in that there's very little, if any, activity when it comes to trading of corporate bonds. Part of it has been the people who have participated in corporate bonds, because usually it is institutional investors. Institutional investors, those being banks and pension funds and the like, don't really trade on the exchange. Trading usually comes from the retail traders. We haven't seen too many retail traders participate in bonds particularly. One of the reasons for that is most companies that issue out a corporate bond usually issue it privately to institutional investors. We are trying to open it up and get it more into retail investors, but that is a new trend that is starting to come up. So that hasn't really happened, and I wouldn't say that has contributed in any significant way to the trading activity on the LuSE in 2024.
There has been mention of disruptive technologies having a huge impact on other industries. What might these disruptive technologies be? And do you see the role of disruptive technology on the Zambian capital market?
So just keeping it in the capital market space, the first example that comes to mind is blockchain. The introduction of blockchain technology in our market is one example of disruptive technology. And the impact that it had, or really how it was used when it was created, is to allow the buying and selling of securities without the need for a central body, which allowed for the trading of cryptocurrency, I think, is most widely known. So obviously this would have a huge impact in the capital market space, because there was an additional place for people to put their money in, an additional kind of asset or security for investors to place their money in. And another impact that this had is that cryptocurrency is a kind of security that's really volatile. And there are definitely some people that think that volatility is something that's required. A bit of volatility in one's portfolio is actually a good thing. And depending on what your strategy is for trading, it can be a really good thing. We've seen people amass a lot of money investing in an asset like crypto, taking advantage of the same volatility that I'm speaking to, all the while obviously being cognizant of the risks, because with a really volatile asset, you can gain a large amount and you can also lose a huge amount. But the point is, it's really been impactful, the introduction of blockchain technology, which allowed for the creation of something like cryptocurrency and allowed people to put their money in an asset like this and lots of money trading in it. Coming to the local market, I think your question was whether we see the role of disruptive technology in the Zambian capital markets, and I think that we certainly do. One example of what I'd call disruptive tech was the introduction of an application in our market, which sounds like old technology now, but it was a new thing as far as our capital markets and trading on the LuSE is concerned. And what that did is it allowed people, obviously, to conveniently access the stocks that are on the Lusaka Securities Exchange, obviously from the comfort of their own homes, using their phones, or whatever device that you use, it enabled people to trade on the LuSE on their mobile devices, which obviously was huge. I think it's safe to say that it probably contributed to the increase in retail investor participation that I spoke to earlier. So that's the first example, I think, locally of disruptive tech that was introduced in our markets and the role that it played in bolstering retail investor activity. And I'll just quickly speak to a second example of something that was introduced in our market that would revolutionize things. I don't think it's been launched yet, but it's definitely in the works. And that's the introduction of the LuSE Gem portal. The idea with the creation of the digital platform was to give SMEs access to financing, which can actually be even cheaper than what they have available to them, because we know funding from banks is extraordinarily expensive. The idea was that this portal would create an easy way for SMEs to access capital in the capital markets, to have direct access to investors that are looking for places to put their money, and also to provide the necessary support throughout the funding process. And it goes without saying that SMEs play a huge role in developing our economy, because if we empower SMEs, they then become employers of citizens of Zambia, most citizens of Zambia, and then obviously increase the income of their employees and thus consumption, and it trickles down to affecting the economy at large, and we can see growth in the economy with increased spending. So it would definitely be really impactful, especially if it's executed properly and we actually do see SMEs accessing financing and building businesses that are successful and can employ people and lift them out of poverty, grow the economy in the long run. So I think those are the two examples that I'll submit locally, and as before, I'll invite my colleagues to contribute as well.
Another example I would give, which is very pertinent to the local context, is mobile money, both with Airtel and MTN. It allows people to get access to the financial systems where they traditionally have been excluded from, that being primarily with banks. We have launched a way for you to buy shares through mobile money. We have set up ourselves as a merchant there. So with Airtel Money specifically, if you go to our website, I think, or if you inquire from us directly, we can give you the instructions and you can buy shares that way. So what this means is we are trying to move with the times, and we are not held by traditional brick and mortar banking when it comes to trading and when it comes to allowing people to gain access to various securities that they can use to reach their financial objectives and to improve themselves and leave a legacy for their children. So mobile money has been fantastic, and I'm excited to see where else technology can be applied to help the growth of the capital markets.
That's quite interesting, especially with your mention of mobile money and the coming of an application to our market. Do you see any changes in the current business models?
Certainly, in business, you have to adapt. Otherwise, you go out of business within a very short period of time. In addition to traditional income streams, we'll see businesses trying to come up with alternative ways of generating more income, maybe just to sustain the operations or even just as a way of growth. So my colleagues have already alluded to the trends that we are seeing, particularly from younger investors, is that they embrace tech. So they want everything to be done on the mobile phone. Therefore, that puts pressure on the existing businesses to rise to the occasion and make sure that you meet the demands that are coming from the investors, but particularly the younger investors. So to answer your question, yes, that's what we are seeing. We see a lot of businesses trying to be innovative in order to meet demand, the requirements being demanded by the new investors that we are seeing, particularly the younger ones. Because even us as stockbrokers, we've been trying to make sure that we upgrade our systems to meet the demands, because we have to be ready for that, and that time is coming.
I would also add, as I touched on briefly earlier, we've got Mwamba Mine, which is being pushed in principle by the CCMIH and Cobalt. One of the interesting things about Mwamba Mine is Cobalt is using AI technology in their mining exploration to speed it up significantly. They should be the first company that's really pushing AI when it comes to mining exploration. So that's looking at data that they receive from the mine, from the sampling that they're doing, as well as looking at the geological maps that they're getting from Mwamba, and then trying to get access to the copper more efficiently. And then when it comes to diversification with CEC, as we said, so CEC was mostly a middleman. Now they're going into energy generation through their wholly owned subsidiary called CEC Renewables. So that's a renewable energy company. And then Puma is also looking to start providing more solar products. I think if you go to a Puma filling station, you'll find a lot of their solar lights and a few other of their solutions. So you can see that businesses are trying to see where the trends are going and trying to meet those trends, as Mr. Mwamba said, to make sure that they survive and not die.
That's quite an interesting point to point out, that businesses do have to move with the times. And finally, in terms of future outlook, How do you judge the prospects of the LuSe market over the next 30 years?
Over the next 30 years, the LuSe is certainly poised for significant growth, which will probably be driven by the growth of Zambia's economy, as well as initiatives to enhance the capital markets in Zambia, and with support from the government of Zambia as well. And I'd just like to speak to that a bit more. Government support is really crucial for our capital markets and for the LuSe to develop and contribute to the economy in a much bigger way. And I just want to run through some of the ways that the government can support the development of the capital markets and the LuSe. If we see them pushing for listings of state-owned enterprises on the LuSe, which would result in increased market capitalization and trading activity, that's one way that they can help our market develop. Another way is if they encourage participation by institutional investors. I mean, that does happen currently, but I think sometimes there's also a lot of unnecessary fear, I would say, from the pension funds that we have now and the typical institutional investors that we approach now. So if there could be some kind of encouragement from the government for them to participate a bit more, that would definitely help the LuSe, particularly in the secondary market. So what we see is that a lot of institutional investors will buy and hold, and I think Mchema mentioned that earlier. Sometimes I think there are quite a few cases where they'll come in at IPO and then just hold those shares. And it's a huge holding. So if we actually saw them trading in these shares, they definitely have a big impact as far as the activity that we see on the LuSe goes. Yeah, so that's another way. Another way is if the government could find a way to incentivize large companies, I spoke to SOEs earlier, but also major private firms to list on the exchange. That would be definitely helpful. And another way is if they provide technical and financial support to smaller firms to meet listings requirements, so if we saw more companies being handheld through the process of becoming investor and listing ready by the government, that could definitely result in more activity on the market. Another way is people are just not aware of what's available to them in capital markets. So another way is partnering with the LuSe, conduct nationwide financial literacy campaigns just to educate the ordinary Zambian in a way that they understand best on what's available to them in the capital markets, what they can invest in with the little that they have, then we'd see even more activity on our market. Even starting to educate people from a young age about finance, personal finance, and investing, and all of those things. So incorporating such education into like school curriculums, making it mandatory for people to learn about investing and the LuSe and so on and so forth. That could be really helpful in the long run. And also, I think we need an upgrade, I think, in the tech that we have. I mentioned the LuSe app is available, but it certainly maybe needs a bit of work. So investing in the technologies that are already available and investing in the research development of technologies that help, let's say, with access to the stock exchange and all the securities that are there, that would definitely, if the investment could come from the government, that would definitely be helpful. So that's just to name a few, but I just wanted to emphasize that government support is really, really, really crucial. They need to realize how much the capital markets can contribute to the economy. I mean, we see it in other countries, like in the US, the stock market is a huge part of the economy and is a huge part of creating wealth for people and things like that. So with that support in place from the government, I think the future of the LuSe in the next 5 years definitely be bright.
When it comes to future prospects of the LuSe, one thing that I am hopefully looking forward to is more corporate bonds coming onto the market. We've had dearth of debt securities when it comes to LuSe. Mostly we've been focused on equity, which they have tried to resolve by renaming themselves. So they moved from the Lusaka Stock Exchange to the Lusaka Securities Exchange. That shows their commitment to getting more into debt. One thing that I would really hope for from a regulatory perspective is the ability to trade government bonds on the LuSe. It's there in principle, but it's not really there in reality. So I think if we got more into government bond trading, it will allow a lot of retail customers to get exposed into government securities and have that as another asset that they can have under their portfolio. And I'm also hoping that once we're done with this drought, that energy situation can normalize, and this transition into green energy will lead to a lot more mining, and the economy really starts to pick up and improve, and we've got more disposable income that leads people to start investing more in the aftermarket. So I think the LuSE, if certain conditions go right, could lead to quite a lot of growth and a lot of transformation in people's lives. However, being a finance professional, I must add the disclaimer that past performance is no indication of future returns. So we're doing well right now, and these are my opinions, but please don't bet your life on it.
Well, thank you for the clarifications, especially the note of past performance does not equal
Future returns.
future returns. Yeah. Well, thank you, Mr. Mwamba, Chema, and Victoria, for coming on today's episode. We wish you a great rest of the day.
Thank you.